The easiest way to categorize the world's top investment banks is into bulge brackets and what's known as elite boutiques. All investment banking firms at the top level can fall into one of these two categories. And whether you're at a bulge bracket or elite boutique is going to impact the kind of work that you get to do, as well as your own career trajectory. The core business model of each is pretty similar, but there are a lot of execution and organizational differences that can make your role as an associate or analyst pretty different. So to begin, let's talk about the bulge brackets. And these are some of the main financial companies in the entire world. A lot of these companies have big consumer arms or lending arms, and that makes their brand a lot more visible and well known. You have companies like Goldman Sachs, Morgan Stanley, Barclays. These are companies that are well known around the world and have offices in every country. Now, on the other hand, we have our elite boutiques, and elite boutiques focus specifically on investment banking. They have significantly leaner operations. That means they don't have consumer arms, it's unlikely they have robust wealth management arms, and they don't do any lending. So at their core, both bulge brackets and elite boutiques both advise companies to do financial transactions. They give them financial advice. But bulge brackets also do many other things. Now, some of the key elite boutique players include Evercore, Lazard, Centerview, which pays an insane amount of money, and Catalyst, which dominates the tech world. So these firms definitely don't have company household names that you'd recognize, but they're very well respected within the industry. So there are a couple of key characteristics that define what an elite boutique is. The first is that they do pure investment banking advisory. When they go to the client, they're specifically focused on giving the client the best strategic advice that the company should do. Whether that's IPOing or buying a company or selling a division, they're there to give independent and thoughtful advice. One of the key criticisms of bulge brackets is that they have so many different arms, they have so many different incentives to manage that a lot of the times they don't give their client the best advice. So these elite boutiques have emerged as a result, saying that they will be what's known as independent advisors. So the second important characteristic is that elite boutiques do not have balance sheets. So that means they don't lend any money. They can't lend companies debt. And when they're on an IPO, they're not actually doing a lot of the placement of shares or issuance of shares. They're more working in an advisory capacity. Now, this point actually has a lot of implications for what your job is like, because you're not going to be working on financings. You probably get less exposure to IPOs and much more exposure to M&A and possibly restructuring. M&A doesn't require a balance sheet from an investment banking perspective. The company itself is using its own money to purchase companies. So all they need is someone to give them good advice and make sure that the numbers are correct. But when you're thinking about an IPO, when you're thinking about raising additional debt, you need to go to a bulge bracket that has the balance sheet to support that kind of transaction. Thirdly, elite boutiques have typically leaner operations, meaning that they have overall less headcount and they have fewer departments and other country offices to sort of hold them down. They're specifically focused on investment banking advisory. On the job, that typically means that your deal teams are smaller, and it also means that there's fewer teams to interface with. Is this a good or bad thing? Honestly, it's kind of hard to say. It might mean that you're doing more work, and it also mean that you might have less infrastructure. One quick example is that a lot of bulge brackets outsource a lot of their work, like the creation of pages or presentations, to places like India, but it's a lot rarer to have a fully fleshed out outsourcing operation at an elite boutique. And one last really important characteristic is that these elite boutiques tend to pay more, potentially 20 to 30% more, and even higher if you're at Centerview. And that's because a lot of these firms were started by old school investment banking MDs that believe that the deal team should get a higher percentage of the overall deal fee. There's also less overhead, fewer administration fees, so altogether, there's just more money available to the deal team. So here we have a list of elite boutiques sorted by M&A value. I wanted to highlight how the market share is pretty different among these different boutiques. So Evercore, Lazard, and Centerview all have above 5% of total market share, and they're all top 10 or so players. But after that, there is a little bit of decline in how much these elite boutiques really pull in. So one takeaway that you should have is that elite boutiques are not all made the same. Many of them have very different styles and focuses and industry specializations. Some of them are doing very well, but many others of them don't have the same amount of market share. So it's important to research the specific firm you're going to before making a judgment. So in terms of pros, the first thing I would say, and it's very obvious, but you just get paid more at elite boutiques. We did a full video talking about investment banking analyst salary if you're interested in checking that out. Secondly, in my experience, I think that these elite boutiques tend to be more supportive of analyst recruiting. From my experience at Evercore and hearing about Moelis and other similar firms, there's just a lot of friendliness and encouragement when it comes to recruiting. These elite boutiques, from my vantage point, tend to be pretty honest with themselves when it comes to recruiting and how that's a draw for potential candidates. So the dialogue about recruiting is open. I found that there's a lot more partners that are helping you with your process. Now, when you contrast that with bulge brackets, there are some firms that really look down on recruiting, that force you to recruit in secret, and that in itself might not have too much of an impact on your recruiting success, but it speaks about how the firms can be culturally. Another great thing about these elite boutiques is that many of the firms are younger and they have a great growth trajectory in front of them. So if your goal is to make it to the MD or partner level, you'll probably have greater success at one of these elite boutiques as opposed to the bulge brackets, which are very crowded. In terms of cons, I think one thing you should be aware of is that overall, outside of finance especially, a lot of these firms have weaker brands and they don't have the same level of prestige. And it's hard to weight exactly how important this is. But if you think that there's a good chance you're going to leave finance if you want to do something else completely and you're just using it only as a stepping stone, you're probably going to be better served going to a bulge bracket. You know, everyone knows what Goldman Sachs is. You don't have to tell people or explain what you did. But even my close friends sometimes forget where I did my banking job. Another big con, which I think was accentuated when I went to private equity, is that you get less exposure to financing. So you just do less work with debt overall. And that honestly becomes a little bit of a problem if you deal with debt a lot in your future jobs. If you're only doing M&A, there are some things that you might just not be familiar with. I don't think this is a huge deal because, most analysts will maybe be on 5 to 10 big projects or big deals in their career. So there's a good chance that other people might not get that exposure either. But it is something to be aware of. Another important factor is that these elite boutiques tend to be a lot leaner, and that makes it so that there are fewer lateral opportunities. So if you want to go to a different country or if you want to switch industries, it's easier to do that at a bulge bracket. For example, companies like Goldman, JP Morgan, Morgan Stanley, they all have asset management divisions within the company. So if you're trying to switch from the sell side to the buy side under the same organization, it's much more likely to do that under a bulge bracket. One last important consideration is the idea of key person risk. So a lot of these elite boutiques were started by one significant founder who brought in a large portion of the deals. So compared to these bulge brackets, they perceivably have more risk tied up with one person. So if that person retires or if they move away from the business, then it can be more challenging for an elite boutique. All things considered, I don't think that there's one category, be it elite boutiques or bulge brackets, that is definitively better. I think it's much more important to evaluate your opportunities from a firm by firm basis. From my observation, if you were to try to rank the analyst and associate opportunities, you would get a mixture of both bulge brackets and elite boutiques. Personally, I worked at Evercore. I thought I had a great experience and a lot of doors open. Honestly, I would still prefer to work at a top group at a place like Goldman or Morgan Stanley. But that being said, I prefer to work at Evercore over a number of different bulge brackets, and the list really depends on the firm by firm opportunity. At the end of the day, I don't think that the labeling of bulge bracket or elite boutique is something to really care about. I think the factors that are more important are if you're in an industry group that you really want to be in, if you're actually doing deals, and if the past analysts and our associates are recruiting to places that you want to be at. All those factors are a lot more important than this particular label. If you'd like to learn more about the world of finance, we have courses on our website at peakframeworks.com. Thank you so much for watching this video. Please subscribe, and I'll see you in the next one.